Thanks very much, and thanks for the opportunity. And it's exciting to be talking to such a packed room with standing room only at the back. So that's great. I have been asked to talk about WA as a potential global lithium hub. So I will cover that off because it's pretty important. There's a lot of talk in the last few months about that very topic, and where does WA sit in the world moving forward. Until last year, many people don't know, but until last year, a third of the world's lithium came out of Western Australia, and all of that lithium came out of one mine, the Talison mine at Greenbushes down south. So we already have a very dominant position in the world. And as of last year and now this year, there's been other miners in Western Australia who have started to export both raw spodumene rock and also spodumene concentrate. So there's now 4 or 5 players in Western Australia who are exporting. If we add up the announced potential production of all of the West Australian listed companies, it comes to somewhere between 3 and 4 million tonnes per annum of spodumene concentrate that could be produced in Western Australia. And if we convert all that into lithium carbonate equivalent, it's about 2.5 times what the world is currently using. So we have the potential to really be a massive player if all of those plays come off. Of course, there's a time factor to many of those miners and where they're at on the current timeline, and there's also the other half of the equation, which is that demand is obviously taking off globally, and so our percentage of world supply will probably remain about the same, but it'll be much more diverse than all coming out of one mine. The other interesting thing is that a number of those players in Western Australia who are currently mining are talking about potentially going into downstream processing, which is what my company's doing. So we could do what we do very well in Western Australia, which is dig all the rock out of the ground and send it all to China for them to process and add value. And that's what's happened up to date with all of the lithium that comes out of Greenbushes. Or we could move further downstream, and it would be great to have 3 or 4 companies in this state all processing their spodumene rock into something that's of significantly higher value, as we're doing at Kwinana and a couple of other parties are talking about doing. So you will hear endlessly over the next 2 days, I'm sure, talk about the lithium market and other markets and how they're being driven by electric vehicles and batteries. You'll see endless graphs and data. What you will see, though, is that in the last 6 months there has been quite an alignment of expectations around where the market is heading, and I think most players now are in similar space. 12 months ago there was a lot of speculation and there wasn't much fact built into what lithium demand was going to do over the next 10 years. In the last 6 months, just about every significant car manufacturer outside of China has come forward with some pretty hard numbers around what they're going to be doing between now and 2025 in terms of electric vehicle manufacture. Last year there was 1 million electric vehicles in the world, which is about 1% of the world's footprint. That will go up substantially. China alone is talking about producing 2 million electric vehicles per year by 2020, which is only 2 years away. So that's a doubling of the world's electric vehicles just in China alone, and all of the other car manufacturers have some pretty bullish targets too. So the alignment around where everyone thinks the market is going is pretty strong. It's at least a 15% year-on-year growth in lithium sales between now and 2025. There is plenty of lithium resources around the world, and Western Australia has more than its fair share of it. But we think the big gap in the next 5 years in particular is going to be in lithium processing. There are a number of projects, a lot smaller than ours, that are underway at the moment, but the sum of everything that is underway at the moment will go nowhere near meeting the global demand for lithium hydroxide and lithium carbonate over the next few years. So that's where the big gap is, and whether that gap closes up by 2025 or not, we will have to wait and see. So I will give a very quick summary of where the market is at. The usual disclaimer, you'll see plenty of those over the next 2 days. The market update, so currently there's 4 large global players. We are one of them. They are all integrated miners and producers, and they produce a large percentage of the world's processed lithium products, and the majority of that is produced in China. So the world is very dependent upon the lithium plants that are currently in various parts of China. 63% of total lithium consumption is currently lithium hydroxide and lithium carbonate, and they're the products that are going into batteries. So it's gone up from about a third a couple of years ago to nearly 2/3 now, and that will continue to grow. And as I said before, there's a number of projects currently underway, but relatively small, and the sum of all of those does not meet the gap in demand. Forecast demand growth. The blue line there is the average of a bunch of analysts. It says that 200,000 tonnes of lithium carbonate equivalent consumed by the world last year will go up to 600,000 tonnes by 2025, so that's threefold in 8 years. Roskill, who are the independent experts in this space, have an even more bullish target of about 850,000, so more than 4 times growth in the next 8 years. So they're very substantial numbers. And if you look at the plant that we're building, we need something like 20 more of those around the world in the next 5 or 6 years just to meet those projections. And there's nowhere near that number being planned at the moment. As I said, all of the car companies have come out with targets in the last 6 months or so, and the sum of all of those targets say that electric vehicles are going to be taking off with some very substantial numbers. Add into that the Chinese growth, and that's what's driving that lithium curve that I showed previously. By 2021, 4 years from now, when our plant is up and running at Kwinana, we expect in the lithium hydroxide space, which is the go-to element now for companies like Tesla, we expect that we'll have about a quarter of the global production. Albemarle, who owns the other half of Greenbushes mine, will have about a quarter as well, and the other players will share the other 50%. So we expect to have a very dominant position in this market in the processing space. I pinched this slide from Kidman Resources. It just shows the West Australian miners, and as I said previously, there's a lot of companies now exporting, and some of those companies talking about downstream processing, which is interesting, and we'd love to see that happen with more plants in Western Australia. It's a great opportunity in this state. I get asked the question all the time these days, are we ever going to produce batteries in Western Australia, and can we be competitive in that space? We've got a long way to go before we produce batteries. We're not even producing lithium hydroxide or lithium carbonate yet. So let's take this one step at a time. Once we're producing those products, whether we can go further downstream to battery precursors or even to cathode production, will be discussions that we'll have, but that's several years down the track. And to think that we can compete with the likes of China, Japan and Korea to produce batteries is going to be pretty challenging. So I'm not that confident that we'll get that far down the supply chain, but there's certainly potential for us to become significant further down the chain than just mining and shipping the ore. So just a quick view of Tianqi Lithium. We're a Chinese listed company, listed on the Shenzhen Stock Exchange. We currently produce 32,000 tonnes per annum from 2 plants we have in China, which 2 are the largest plants in the world. We have a target to produce 100,000 tonnes per annum by 2020, which is when our Kwinana plant will be finished. Current global consumption is 200,000 tonnes, so based on current consumption, that's a fairly significant percentage. And we own 51% of the Greenbushes mine, which is a fantastic asset to have, and we will have some pretty substantial downstream refining capacity once a number of other plants come online. Share price has doubled in the last 12 months. We've now got a market cap of 11.6 billion US. That's only 4 or 5 years ago we were less than 1 billion, so the company has grown very dramatically in that time. And for a company of this size to have 100% growth in 12 months is pretty substantial. And I expect that will continue as we continue to look at opportunities to expand and grow the business. A bit of the company history. We started in 1995 with the Shihong facility just outside of Chengdu. That was a 12,000 tonne per annum lithium carbonate plant, which was very large scale back then. We listed in 2010 on the Shenzhen Stock Exchange. We bought Tianqi Lithium, 51% of it, in 2014. That was an absolute game changer given the quality of that asset. And we bought a facility from Galaxy in Zhangjiagang outside of Shanghai in 2015. And last year we bought the world's largest lithium metal facility in Chongqing. And by 2019 we expect to have Kwinana Stage 1 up and running, 2020 Kwinana Stage 2, and also in 2020 a new plant in China, which the feasibility study is being done now. So we're at the mining and manufacturing end of the scale. We do sell our products directly to the global customers. Previously more the likes of Panasonic, LG, etc., but now the car manufacturers are getting very directly involved in purchasing lithium hydroxide and lithium carbonate directly from producers like us. So we sit in a really good part of the value chain. Our upstream assets, we own 51% of Greenbushes, which has a capacity to produce about 90,000 tonnes lithium carbonate equivalent. And Greenbushes 2, which is the expansion that's currently underway, will double that capacity. And we have another smaller number of smaller facilities, both in Chile and China and in Canada, but our real focus is on the Greenbushes site. So Talison Lithium, Tianqi owns 51% of Talison. Talison is the longest continuously running mine in Australia. It's been going for 128 years. It was a tin mine, then became a tantalum mine, and more recently a lithium mine, and commenced manufacturing and exporting lithium concentrate back in 1985. And as I previously said, it supplies about a third of the world's lithium comes out of that mine. And it's of a very high grade, the highest grade ore deposit in the world, and massive reserves as well. Has about a 60-year life, which we will be reducing with the expansion that's going on at the moment. But we're also drilling to try and increase those reserves, so that will happen in the time ahead as well. And this year we've started an expansion to take it from 630,000 tonnes per year to 1.3 million tonnes per year. So that's more than doubling the throughput. And that gives us 180,000 tonnes per annum of lithium carbonate equivalent, which is split between ourselves and Albemarle. So you'll see that our target of achieving 100,000 tonnes of lithium carbonate equivalent by 2020 can be nearly all supplied from our share of the Talison mine. Just looking at our downstream refining facilities, we own the 2 plants in China that produce 32,000 tonnes between them. Kwinana Stage 1 is the largest plant in the world at 24,000 tonnes. Stage 2 will double that. And we're also looking at a 20,000 tonne plant in China, which will be built in parallel with the ones we're building in Kwinana. So the Kwinana facility is a $700 million investment by our company. We'll create 500 construction jobs. There's about 300 people on site at the moment. And it'll create nearly 200 full-time jobs when the plant is up and running, and will produce 48,000 tonnes of lithium hydroxide. Put that into perspective, last year the global consumption of lithium hydroxide was 35,000 tonnes. So this one plant will produce more than the world is currently using, but the growth in hydroxide is even more aggressive than lithium carbonate. So very exciting project for us. Oop. I think I've just skipped over my video. I'll go back to that in a second. No. Can I get that to play?
In October 2016, Tianqi approved the development of a new state-of-the-art, large-scale lithium hydroxide processing plant to be constructed in Kwinana, Western Australia. 1 year later, the construction of Train 1 is progressing on target, with scheduled completion due in the fourth quarter of 2018. It is widely forecast that the consumption of lithium hydroxide as a key material in the manufacture of lithium-ion batteries will continue to grow rapidly. As such, Tianqi are planning to develop Train 2 of the lithium hydroxide facility at Kwinana. Continuing on from Train 1, MSP Engineering was appointed to undertake a detailed feasibility study for Train 2 between June and October 2017. Train 2 will be a duplication of Train 1 and will share common infrastructure and services with Train 1, including the spodumene receival system, the TAS filtration and disposal system, the non-process infrastructure, and the product bagging and storage facility. Once Train 2 is complete, the Kwinana lithium hydroxide facility will have a capacity of 48,000 tonnes per annum of high-quality battery-grade lithium hydroxide, and will be the world's largest lithium hydroxide producer. The feasibility study determined that Train 2 will be constructed for circa $320 million over a 26-month period, with commissioning commencing in the fourth quarter of 2019.
So our intention when we started construction of Stage 1 last year in October was that we would complete that by the end of 2018. We would probably run that for 6 or 12 months and iron out any bugs, and then we would start construction of Stage 2. Very exciting that our board has just approved a couple of weeks ago for construction of Stage 2 to start immediately. We've already ordered $55 million worth of long lead item equipment, and construction on site will commence within the next couple of weeks, with the civil and concrete contractors who are just finishing off Stage 1 moving straight across to start construction on Stage 2. So it's very efficient. It's very aggressive, and we are targeting this plant to build to be not only the biggest plant by quite some size in the world, but it will produce the highest quality lithium hydroxide that will be available anywhere in the world. And there is a significant demand for that from car manufacturers and battery manufacturers. So it's a great opportunity. I would really love for other companies to join in that opportunity, and we could therefore see Western Australia and potentially the Kwinana Strip or other parts of Western Australia, whether it be Goldfields, Pilbara or down south, closer to Bunbury and closer to the mine. We could see other plants around the state, and this state could not only become a very significant contributor to supply of resources for manufacture of lithium products in other parts of the world, but it would be great if we could do that here. And to put that into perspective, spodumene concentrate currently exports out of Greenbushes for about $800 a tonne, and the spot price for lithium hydroxide is anywhere between $15,000 and $20,000 a tonne. So that's the degree of value add that we're doing here, and it's a fantastic opportunity for WA, and we're blessed with some of the best lithium resources in the world, and hopefully we can do what we haven't done greatly well in this state before, and that is go further downstream and add some significant value. So exciting project for us, and we look forward to an opportunity maybe next year to update you as we're getting close to moving into production. Thank you.